The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition. This is the last day of the week. This is the last day of August, the trading day. And I think it's happened quite a few times this year that we've had the last trading day. I like it when the last trading day of the month is a Friday, or the last day of trading is the last day of the week, and the last day of the month. It just makes it so nice and clean, because then you're looking at charts, and that's what we need to do today. So we've got a very full program. Of course, we've had a very full program already. We've had 2 hours with our wonderful technicians here. We've got Steve, Tom, and Daryl. Just really fabulous shows. We got Nico DeHaan coming up. We got let's see, today we'll have Dave White, great technician. We've got Ken Shreve comes to us with his IBD background, or wonderful techniques there. Then, of course, the one and only Tom O'Brien, 4 o'clock till 6, wraps up the whole week and projects what he expects for the coming weeks. And here we are. Dow's up 131 at 13,131. What did it do? I spoke about this in my technique, in the ChapmanWave methodology. Under the umbrella of the ChapmanWave, I have dozens. I'm starting to count them now, how many different techniques there are. Round numbers, inside wedge, inside track, overlapping wave, the left side, right side, price, time. It just goes on and on and on. These techniques can really, I don't believe in being, I think you have to be a jack of all trades when you're in the market. You have to have all the tools, the plumb line. You need to know what you're looking at. To rely on just maybe one indicator, unless you've done it for so long that that's the indicator that you are just so comfortable with, you can use it over and over and over again and make money with it. I prefer, especially as I feel as if I'm an educator, I have my subscription service, the opening call. It's a very comprehensive service every single day. 6, 7 charts, 8 charts, whatever's needed to show the 120 minutes, even the 10 minute on the S&P futures. The 10 minute goes to the 120 minute. But then I show the daily charts and the monthly and the weekly charts. I think it's imperative that we get a sense of the tide, because if you're looking at something and on a very short-term trade, you can look at a rally, but you know that it's within the context. When I always say, when you throw a piece of driftwood out, if the tide is going out, there's no way. I saw this at the beach just the other day. There's no way that the tide is coming in. There was this little girl, and she had this very big shark. It was either a dolphin or a shark. Blow up balloon. And so she was trying to get onto it, and she gets onto it, and the father was holding her up, and he pushes her out a little bit, and the tide was coming in, and she just kept coming back to the shore. And I'm saying to myself, wow, there it is, right there. That's the stock market. You can trade against the tide, but you've got to know you're doing it, and you can do it for a short period of time. If you get the greater tide, the greater direction of the tide going in from low tide to high tide, it just makes it so much easier, because if you are wrong and you've got the right trend, the tide will save you. Now, it hasn't saved me all that many times, because there are a number of times where I've literally nearly drowned. I'm not a great swimmer. I used to love diving. I used to love body surfing, but not a great swimmer. My father also wasn't a good swimmer, but he used to love body surfing. So what we're looking at here is, what is the tide? Let's go through these one by one. I think today is Technical Friday, where I can answer some ChapmanWave questions. Of course, I'd love to do that. Love to answer your questions right here at TFNN. And even more importantly, let's go through what we are looking at and how come the Dow managed to rally off this particular point. If you are looking at Tiger TV, let me put mine on here. I forgot all about that already. If you're looking at Tiger TV, and I'm using my Droid, I don't know how long I'll keep this Droid, I'm not that happy with it, this cell phone, you can pick it up. I hope it's not going to come on full blast. You can pick up the charts, and you will see it, just like I'm about to see it right now, tfnn.com, and there it is. There it is. So I'm looking, I've expanded. This is the daily chart. Let me just put it right here. There you go. Good. So I've put it there. And now what we're going to look at is this is the daily chart. You remember I spoke about the up channel, and with inside it, there's an inside track. Let me just check this out here. In my CD, Introducing the ChapmanWave Methodology, let me go to view. I can't remember where it says inside track. I just don't remember where it is offhand. So I say find, and then I show inside track. Actually, I used to have another system that came up. It was even easier to find, but this is easy enough. You go click, and what it says, there it is. This is out of 476 slides. On slide 39, it shows you a decisive, and I did this while I was here at TFN, and I showed this and I developed it. You see the green, I used to use a red line with a dashed red line underneath in a larger, down, in this case, down channel, and then the buy zone was with the dark green line and the dashed green line. Within that, there was a series of there's a border. Let's call it. Within the channel, there's an inside border. All these years I was looking for the word. I found it today on August the 31st. Inside border. Doesn't that? I love to explain. I like the words to explain exactly what I'm looking at. So there was an inside border. So that inside border said that when you got to the dashed line at that particular point, you could start thinking of a reversal. Now look at this. When you got this lower one, you've got an inside border right there, and the price ran up. This is the Dow from the year 2004, from the highs down to the lows, all the way down. It was the same kind of yo-yo chart formation, except in a down mode with arch formations. And this is what I'm looking at here, but the inverse. What does that mean? It says, I've got the same kind of pattern. I've now, over the past, I think it's about a year now, what I've done is I've used the same technique, but I've made it a green line on the inside border high from the low of the up channel. And on the inside border from the top down, I've got a red line. Why? That's the repellent zone. That's the sell zone. That's the reversal zone. So yesterday, and as I was doing when I was talking to Tom in the interview, I said, we're just on the border of support. It's imperative that right now there's some kind of support, and that our three bears, now this is going to be even more fascinating. I want to go through our three bears, VIXY, Dolly, and Bondi in a moment, but that's bonds, volatility index, and dollar. But let's look at this. It says that we've just made a gray A. It doesn't matter. We can close. We could fail. We could go all the way down to 12,900. This still becomes an A, but then if it fails, it becomes an A minus, and I call it a gray A. Why? Because the uppercase letters in the buy mode are yellow, because it's decisive, it's clear, it's going to higher highs, and it's over the previous high, so it can only... There is a moment where you could have a parallel wave count, but then mostly it's very clear. Now on the downside, I go for lower troughs, get the lower case, and that's trough A and trough B. What I said to subscribers of my opening call this morning, I spent a lot of time trying to explain what I'm looking at. What I said is on the previous two declines, what we had was, let me just finish this, blue, and that's a B. We had... There it is, blue. And now the low yesterday was 1,978, I think it was. I can't remember now. I'm just going to put 178, and then I'll change it if that's necessary. And what it said was it 80, 89? All right, I completely messed up that one. I'll retype it. That low was 12,978. That was correct. Okay, 12,978. Now what's important is that at other times, the most we've had was a pullback of either one leg or in a couple of cases, there were two legs down, as it was from 12,898 back in the 19th of June, down to the low bar of May no, it was June the 26th. That was 2 bars down to a trough B. There was a rally up. So what I'd say is it's very important for chart patterns that repeat over and over for this to repeat by making a very strong spike. Where was the spike resistance? The spike resistance was at the 9-period exponential moving average of 13,165. Showed the same thing happening in the 120-minute chart. Trough E got into a low base of support. The stochastic was trying to turn around, and we got that turnaround. Now, that's just one part of the puzzle. Look at this. The volatility index held at the high, it went to 1804. Well, the high yesterday, let me just double check here. The high yesterday was 1805, 1 penny below today. So that makes a double top potential. And if the volatility index by the end of the day or on Monday closes underneath 16.79, we're back in buy velocity. That means that the buy programs are coming in, and the buying pressure is creating this upward move. Great. 120-minute chart held the 200-period exponential moving average exactly at 12,978. Rallied sharply. The day is young. Anything can happen. There is some information here about the short-term trading index. This is the ChapmanWave Trin gauge. This is actually Richard Arm's Trin index. I use it as a Trin gauge with specific parameters, and that is saying to me that regardless of where we close today, at some point early on Monday morning, there should be a bit of a pullback, and that's what I'm anticipating. So here's the E-minis. You know what? I don't want to spend time on that. I want to go straight to what we want to look at, which is the daily going to the weekly chart. Could be the Dow. It could be anything you want. I'm using the Dow now because it's just, for me, it's a key index at this particular time because UTX, my pilot light indicator, is actually moving very nicely. So we're going to go to our first call, but first I'm going to say, let me run the numbers. Where are the numbers? The Dow is up 133 at 13,123. The comp index is up 25 at 3,074. The S&P is up 13 at 1412. The gold is up 20 at 1670. Hey, great call, Larry Pesavento. And great call. And silver's up 70 cents at 31. Copper's up 1. And high-grade copper's up a little bit. And bonds are up 9:30 seconds. We'll be back with Travis from St. Louis, Minnesota. And M.O. Yep, straight after this, I'll be right back. Basil Chapman, Tiger Technicians Hour, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Dow's up 145 points. S&P's up almost 13. Dow's actually stronger. And that's the reason why I wanted to focus on the Dow. And we're going to go back to the Dow soon after we speak to Travis in St. Louis. Hi, Travis. How are you?
Doing great. Good morning to you, Basil.
Good morning. You'd like to look at?
Well, I don't have a position, but I'm looking at Panera as a potential buy. Is it at a peak A on the daily right now?
Now, so this is, folks, we're looking at PNRA. This is Panera Bread. It's been a fantastic stock. It's been a stock that's gone. Talking about the channels, remember we're just talking about the inside border that I use that's within the up channel or down channel. Well, this held its inside border just fantastically. Then it broke out of it at $165.99. That is a stock that went from $30.60 back in January of 2008 all the way peak ABCD. Oh, I haven't spoken about it. Folks, in the ChapmanWave, a very simple technique I use. You're looking at the most obvious lowest low bar and then merely counting each successive peak. If you do that in Panera Bread, going all the way back from its IPO, well, below from its IPO, when you go from $2.06 back in October of 98, that's 1998, it went to a peak E at in July of 01, pulled back, went to a peak D, and then just a quick E, just like it did before. In September of 2003, pulled back under the 9-period exponential moving average to about the 32 area, and then it ran up to a beautiful peak, A, B, C, D, and that was the high at 75.88 back in April of 2006. Then it made a cup formation, broke out, went to another peak, A, B, C, D. Look how many times this happens. It's just an amazing thing. Peak D at 68 in April of 2010. I love the sequential Aprils that it keeps hitting. And then what does it do? It makes a very quick ABCD to July of 2011 at 133, pulls back, and then it runs to the most recent high in leg E to 165.99. Now, this is a very interesting thing because it made a high of 165.99, then it pulled back and made a round number high of 164. 164 is the absolute critical level. If it closes above 164, there's just a very good chance not only will it test 165.99, it could even make a leg F to the upside above that and going to the 166s. The way I'm looking at it is the stochastic is starting to fail. The MACD, stochastic is 75%. The MACD is turning down. It's got the dolphin pattern starting to turn down as the beak closes down underneath the 9-period exponential moving average. Now, if you look at the weekly chart has a cup formation, but this cup formation comes from a very extended move to the upside. It's what I call in the Chapman wave. I'll just show it here in my CD introducing the ChapmanWave methodology. It shows view, look for, find. It's a pattern I call I'll just call it the drop bucket because that was the easiest way to name it before. There's a pattern that I use and it shows double top formations. This is really a double top formation. It's like the pattern I call the lowercase dreaded H, the H formation. Here, instead of going to the bottoms, it's double topping at the previous left side high. Well, in this particular instance, it's done the same thing. Now there are three things I look for. There's a cup and ladle pattern that can form, one of my least favorite. And that says that it's probably, if it goes to 164, it could go a little higher, but when it comes back down, there's a real good chance it's going to retest the low that it's just recently made, and that'll be 152, number one. Number two is it could make a rectangle formation, not going to 164, but instead testing slightly higher highs in a shorter time frame. That would be the daily chart, and that would make it leg A right now. Leg B would be above 157.85, and that would say there's a slow walk to the upside as long as the technicals are good, but the stochastic is not good. It's at 71%, and the MACD is positive, so there's 1 out of 2 technical indicators, and it's walking the 9 EMA, which is at 153, I believe. So that's the second one. Now the third one says, and this is the one that I've been going for with my subscribers because we are actually short Panera Bread from a little higher up, and we've got a very tight, I think it's a 2-point stop I've got on $156 stock. That's really very, very tight. But the reason is for the thinking I'm giving you that the upside would start to worm its way higher were it to break out above those two levels. Now let's look at the downside. The downside says if it takes, the low today was 154.38. If it takes out 154.38, closes under it in the next by Tuesday afternoon or Wednesday without going above 157.85, that'd be a negative because it'll say it's probably going to test 152.26. That's the low of the 23rd. So let me give you my summation in a moment, and I can tell you a possible way to trade it, but it would only be a very quick trade if it was on the upside. So let's hold off. I'll be right back with that. Thanks for holding on. Be back with Travis, and we'll be right back with Panera Bread, PNRA, and I'll give you another assessment of that particular group.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, and we are looking at it down. It's really done very well, up 123 on the Bernanke non-comment comments. S&P is up about 11, and we're on right now. We are looking at Panera Bread, PNRA, with Travis. And what I had said is there were 3 scenarios for the pattern that's forming now. My bias is to say that it's probably going to be pulling back. And one of the reasons is, if you look at a CMG, which is kind of in the same area, not exactly, but CMG is Chipotle, Mexican Grill, and we did have very nice profits in this. But look, it's in a downtrend. It's not been able to have a decent rally from the smash to the downside from the 396 level down to 338. In fact, it went low. It went down to 277. This is a stock that was just a couple of weeks ago was trading up in the 400s. And it's telling me that in a certain sense that some of the restaurant area is really having a tough time. So I'm going to do this. I'm going to say to you that for Panera Bread, this is the way I've got it. I will give the trade out that we have in my opening call. We've got many trades. You asked me the question. I'm just going to be as straightforward as I can. We are short from 156.51. We've been short for all of August, and it's held. But I'm anticipating, because of the way the MACD has acted and the stochastics at 79%, that this is the absolute critical moment. Because if it takes out 157.85 and I've got a 2-point stop, I might even just take my money off right there. If today we hold, I might even say on Friday, look, if it closes 1 penny above that, that's leg B, and that will push the stochastic up into the 80% area and probably turn the MACD up. But if the MACD deflects lower here, and by the end of the day, if Panera closes in the 155 to 154 area, that will confirm for me that it is ignoring, and this is the most important thing. I've been speaking about this for a long time. There are stocks that are going down that are totally ignoring those big 100-plus point days on the upside, and then when the market pulls back, they're either just holding steady or dipping down a little bit, but mostly they're not breaking down. And that says to me they need a little more time before the institutions have worked their way out of these positions, and then there's a volatility vortex to the downside. That's what I'm looking at. Could I be wrong? Oh, absolutely. I've just given you the two scenarios for upside action, but even the upside action says at this point I see limited upside for Panera. So I'm going to make this suggestion. If Panera goes 1 penny above 157.85, the high of the 29th, if you want to just nibble on a small position, hey, 5.6 points is nothing to sneeze at, I would say fine. Do that, but put in a very tight stop. I would even make the stop like 2.5 points. I don't want to, if I'm only expecting 5 points, I don't want to give away 3 or 4. So if that's the trade that you would like, I'd say okay, because it could slowly work its way up towards the level, and that could take maybe even a week or 2 or 3, and then you can start to think about what it's going to do, because you are in the position and you're raising your stop. My preference right now is actually to be looking at the short side of this. I am short. Subscribers have gotten for a while now, and it seems to have worked. I want to see what's going to happen to the downside. It just might be using up time to consolidate. So, and I know that you like to look at things more like a swing trade, to have a position and maybe hold it for a little longer, but that's my recommendation. That I'm looking at the short side working. I would say that if the 153 to 151 level is taken out in the next couple of weeks, this thing could go really quickly down to the 145 area. So if I'm wrong, I've got a 2-point stop is not a big deal. So do you understand what I'm doing? So I hope that helps you, and that's the way that I've got it. Travis, thanks for holding on. I know that you couldn't hold all the way through, but that's my reasoning, and I've just confirmed it again. Now, what I said I would also do is this. I'm looking at the weekly chart of the Dow. I want to just quickly do this, and then I need to go to my 3 bears, VIXY, Bondi, and Dolly. The weekly chart says, hey, don't get too cocky here. Don't think that that the upside is just all systems are go. Hey, don't be too cocky about the downside either, because the stochastic's at 92% and the MACD is acting well, but you are not yet breaking in the Dow in this left side, right side time price match, which goes to the week of the 21st of September. So far, you're not breaking decisively above 13,338. You only went to 13,330. It's needed to start laying D up, but not just a D that goes stuck in about 13,400. Leg D needs to get to the 13,390s to 13,000. Did I say 390s? No, 13,000. Yeah, 13,390s, and then continue going in the weekly chart to the 13,490 to 13,530 area. That would be really impressive action, because I need that for the weekly chart to be successful in having these drives to the top. Now, I don't use the 3 drives to the top pattern, but it's the drives I'm talking about are trying to tackle the 14,198 high of October of 2007. Now let's do this. So that's the Dow, and the parameters on the downside are just really clear for me. If the Dow was to break under, we'll do one thing at a time. If it was to close underneath the up channel support, remember what I was talking about in my CD introducing the ChapmanWave methodology? If the Dow closed anytime next week, intra-week, I'm not even talking about on a weekly basis, at 12,920 to 12,880, I have to say, really be careful. Why? Now I'm going to jump the step, and I'm going to go to the TLT, the Lehman T-Bond Fund. This is the iShares, and it's a 20-year, not 30-year. I spoke about this the other day, where I had a question about bonds, and I had said, I have got a single leg A up, but so far the one technique that always tells me that it's going to be, that it has a chance to hold or it has a chance to break, is if the slow stochastic, and this is a technique that I discuss quite often, if the technique shows that it can only go, the stochastic can only go above 80% for a very short period, and then with the price breaking down, it goes back under the 80% level. What I said is, I've got a pattern here that I call the squash. The stochastic rallies very sharply. The MACD turns. This is the MACD, the upper yellow and red band, and the yellow and red band at the bottom is the slow stochastic. When that holds at 85, and now it's at 87%, that creates upside pressure in whatever activity you're looking at, and it can take you to a C before it starts to pull back, and then the fast-moving average takes over and holds you higher. So far, bonds are holding very well. You've got leg B, not A, failure. You've got leg B. I said it's got to tackle that breakdown period between 127.37 and the high of 126.39. Today's high is 126.92, so it hasn't gone all the way to that bar, the bar of the 6th of August, but it is good. Now, how come you've got bonds rallying quite nicely, the TLT rallying up 0.40, and the market is up 0.99 and 0.81 in the down the S&P? Well, there's something else that you need to look at, and that is the volatility index, the VIX. I will go to the euro as well. I was asked about that. I was also asked about stops. I hope I can get to it, and I'll do that in a moment. Now, what we're looking at is that the VIX did not break above 18.05. This is leg B, and it's pulling back. Hey, doesn't that look like the TLT where it's holding so beautifully? Yes, at 93%. So I have 2 now out of my 3 bears acting really well, and yet the market is going higher. That's a bifurcation. That's what I've been talking about in this particular market, that you've got to look at individual stocks, which is what I've done for my subscribers. We are short, which seems to be working nicely, and we are long, and that seems to be working nicely. Go figure. That's just the way it is. Oh, I say it's working nicely right now. Yep, it's still working nicely right now because we've not been stopped out of any of the longs. Now, look at this. The volatility index in the weekly chart is going to probably close, if it doesn't completely collapse by the end of the day, above 1627, which is the 9-period exponential moving average in the weekly chart. That's good action. But there's something that's wrong with the technical picture. That is that the rally is starting with the MACD still very high, and the stochastic is with the MACD, and the stochastic is coming off about a 4% level to only a 6.47 level. That says go to the monthly chart. Where's the monthly chart? The monthly chart is still underneath 19.75, which is the 9-period exponential moving average, and that to me is the key. As long as the VIX does not climb into the 1950, and then we start going back to the 20s, but right now it's about the 1930 to the 1950 area. I think that this market has a chance to at least hold quite well up here. Now, the one missing link about the 3 bears is the dollar index, the Dixie, and and Dixie is Dolly. Dolly has made a new low at a trough, a leg E. It went down to 80.96. So the dollar is not working. And the EUR, and I'm going to go straight to our next caller in a moment, the EUR is in leg E up. And where is it going? It's bouncing into the upside, inside border. That border that's the repellent zone. It's right there at 1.26270, leg E. But the stochastic is holding quite well at 83%, not 90, but 83, and the MACD fast-moving average is still holding well. So we've got our parameters set very clearly. If the Euro-EUR-USD currency pair breaks down underneath 125, it's going to retest, and anytime in the next 3-4 days, it'll retest the up channel inside border, or inside track, and that'll be say 1.244 is absolutely 1.242 is imperative to hold. I've got those things cut out very nicely because if the VIX falls, the VIX starts to break down, and the VIX, which is right now at 17.22, pulls back towards the 16.80, 16.30 level, That'll be very encouraging to the market. Day is young. Let's go to our next caller. We've got Dave in Grand Rapids, Michigan. Hi, Dave. How are you?
Hey, Basil. How are you doing?
Very well, thank you. You'd like to look at... Oh, I don't have this notated.
Oh, I would like to look at MUX.
That's McEwen Mining.
Yep.
I've never done anything with this. Hold on one second, because the symbol is MUX. Is trading at $3.91. Let me just quickly, you'll see, folks, how if you're looking at Tiger TV, this is the monthly chart. I'm going A, B, C, D. That's very important, because there could be an inside. There could be an instant restart, but instead it goes E, and it goes to the peak F top, which is always a heads up to say, if you get to a peak F top and your MACD and stochastic are failing, watch out, because this could turn into a very sharp decline, and it turns into the pattern that I call the Eiffel Tower. It goes up like a capital A, like an uppercase A, and then it comes down like the right side of the A. I call it the Eiffel Tower decline, and now it's bouncing off the 200-period moving average at 3.90. So the monthly chart says stochastic's turning up, MACD's trying to turn up, and if it can close this afternoon above 3 point, where it is now, 3.89, if it can close at 3.90, it'll be the first time it closed above the 9-period moving average for the first time since January of this year. Let's go to the weekly chart. Do you have a position in this?
No, not yet.
Okay, so you're looking to get in, and I'm looking to see where we are in the weekly chart. Weekly chart is in leg D, bumping against the 200-period exponential moving average. So that says that the resistance, regardless of whether you got in now or not, the resistance is at 429. And if it holds above that, then the left side high is 466 that it could tackle. Very nice percentage gain. So let's keep that in mind. Now we go to the daily chart. So that's A, B, C, D, another A, B, C, D. A consistent stock this has been in terms of the ChapmanWave. So this is my recommendation, because after every other peak D, it's had a pretty substantial pullback. I'm going to say to you that the break above the 200-period exponential moving average, and then the pullback under it, and today's attempt to push above and maybe even close above, is a very good sign. It's the first really good sign that I've seen in the stock. Now, the risk is that if you bought it here and it pulled back, it doesn't really have support. If it breaks under 340, no, if it breaks under 363, doesn't really have support till it hits the moving average there, 337. Wow, you've given me a difficult task, because I like the chart. I love the way it's acting. I like the weekly. I know exactly what to do. Tell me if this fits the way you trade. I would recommend starting a position right now, but it has to be a small position at $3.91. If at $3.91, it survives the day by not closing under $3.82, and Monday, regardless of what happens to gold, I don't know if it's a gold or a silver stock, it's just McEwen Mining.
Yeah, it's
and I don't know if is this the famous McEwen that Tom interviews?
Yeah, it used to be.
Right. What was it? Okay, good. Well, I like what's going on. I like the fact that the weekly is pointing towards 429. You know what? I'll do a little more work during the break, and then I'll come back and I'll give you my assessment. If you want to hold on, I'll be doing that. Is that okay?
Okay, thank you.
But in the meantime, if you want to nibble on a position right now during the break, I would recommend that, because that's what I'm going to start telling you to do.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, Basil Chapman, and we are on right now with David Grand Rapids asking about MUX. And thanks to the Dan, we got this wonderful medium here. I was told that it was formerly UXG and MNEF, and it's a combined company now. Yes. So my recommendation, Dave, is to start your position right here at $3.90, but a small position. That small position, I would say, needs to have a stop. I know it's a big percentage, but that's just the way it is when you have small price stocks. At 369, if it takes out 369, there's a good chance it's going to break the 363 low. You could even make 362 the stop. I don't think it's going there right now, but it could go there by after the first day of trading next week. I think it was that Tuesday. It could go there by Wednesday morning if it starts to fail. But what I love about this, that if it starts to take off, you will know, because if it crosses 396, that's going to be positive. And what I would say to you, if it goes above 403, you can add another small position, and that small position has a target, and the target is to go above 422. That's this peak D that we just made a couple of days ago, and that will extend leg D and it would go to leg E in the weekly, and your target is 429. At 429, I'd probably say you could take that position off as a trading position and keep your core position. That's kind of the way I would trade it. And maybe if you're in it, we can look at it again Wednesday morning. But that's what I'd be looking at.
Okay, thank you very much, Basil.
So most importantly, the three time frames, the daily is acting very well, weekly is acting very, very well, and the monthly has improved a lot. So I hope that helps. So thank you so much for calling. Have a great weekend.
Yeah, you too. Have a good weekend.
Thank you. So, folks, I've got just a couple of quick questions here. One is a quick question about Apple. And what I would do now is say that Apple is looking like it's consolidating of the hard work it just did to go to 680.87. If Apple doesn't make a new recovery high today or on Tuesday at 668.60, if it doesn't go even 1 penny above that, but instead starts to slip underneath 663, it's at 664.54 right now, up only 67 cents. I suspect it's in the 120-minute chart says it's made a peak F, and there's a real good chance that it's going to a consolidation, and that consolidation says that it should try to hold the 663 area, 663 to, like 661, because if it breaks under 661, it'll retest the candle low of today of 666.78. If it breaks 66678, then it's in this rectangle formation, and the next level of support will be 655.55. I'm not sure it'll go further than that without at least a decent bounce, because if it does, then you're looking at 648. Right now, I think it's consolidating the big gains in a holding pattern. Watch out on the upside, because if it breaks above 671, then 673 and 680, 677, and the 680 will be the upside. Now, I needed to do this. I had a couple of questions. Now, we were short, my subscribers, we were short Joseph A. Banks for 6 months, like a 20% profit. I did expect that finally this thing would break, but it did break. It broke to the upside. Thank goodness we still got a 2-point profit, which is about a 5% profit after being in this for just all that time and a huge spike up. So I'm looking at this and I'm saying there's going to be a chance where we might either we're going to be able to short it again, or this is the most fantastic company on Wall Street because they do everything right. It's holding in a high level consolidation, and it's been one of the best stocks for 10 years. So I'm watching Joseph A. Banks, JOSB. Now, the other thing I'd spoken about was we were short RTH. That is the retail index, the market vectors retail ETF. We took a 1-point profit on a $44.50 stock. That's not a big deal, but I'm watching this. It's in the inside track. It went to leg D today. So what am I watching? I'm watching Dow 13,000 as key support, but 12,920 to 12,900 going into next week. On the upside, a breaking to the 13,250s is good. I'm watching the retail index. I'm watching my 3 bears, and I'm watching a weekend coming up. Have a fantastic weekend, everybody. I'll be back on Wednesday.